One of the major differences between a professional investor and an unprofessional is that the professional usually faces easy decisions, and the unprofessional usually faces painful decisions. And as central banks across the world have been hiking interest rates in response to inflation, it is assumed that the world may be edging towards a global recession in 2023. With a string of financial crises in emerging markets and developing economies, we can expect things to not go too well in the long run. Just a few months ago, Charlie Munger, one of the greatest investors of all time, predicted that the markets would face considerable trouble. He has been discussing what he sees regarding the economy, oil, and renewable energy. The good thing is that he also has given us basic tips on investing during a recession. There is no better way than Charlie's tips on formulating wealth, and he believes the recession won't be a setback. So, if one can follow his lead in terms of investment psychology and strategies, it will indeed serve one well in one's activities regardless of the current market situation. And that's why we're here today. In today's video, we will be talking about Charlie Munger's ways of investing during a recession. These tips will be indeed useful for potential and even experienced investors. So, watch this video to the end and get ready to be inspired. Also, do not forget to subscribe to our channel and click on the notification icon so you can stay updated with our videos. Without wasting any more time, let's get going. Charlie explained to investors to build a diversified portfolio, but not to have it over-diversified. Indeed, over-diversification increases risk, stunts returns, and raises transaction costs and taxes. It will be unwise and stupid to put all eggs in a basket, especially in this economic crisis. Owning too many mutual funds in multiple areas can increase risk by concentrating your holdings in a few areas. If you were 60% or 70% in equities, you could reduce that to 40% or 50%. The bond side carry a greater weight because there is less volatility and more opportunity. That's why it's good to remain diversified, because it may be hard to choose one sector over another. Also, Charlie Munger believes that savings and investments go hand in hand. Even though it is difficult to hit your first $100,000 mark, once you have done the work and achieved it, you earn even millions. One of the ways to make significant gains is to acquire highly profitable equities. Charlie pointed this out as something really important. He does it, and he always advises people to do the same, even during a recession. The main benefit of an equity investment is the possibility to increase the value of the principal amount invested, which comes in the form of dividends and capital gains. You should understand that an equity fund does give investors a diversified investment option, typically for a minimum initial investment amount. So, buying equity shares of profitable businesses will be a very wise investment. When an individual owns business equity, they own a financial interest in a particular company. So, those who own equity are always referred to as shareholders. You can also refer to equities as securities, an investment a shareholder can sell or exchange for money. If a company were to close and pay off its debt, a shareholder's equity is the money it would collect. Owning stock in a company gives shareholders the potential for capital gains and dividends. If you own equity through your job, it is undoubtedly a great way to build wealth. Charlie also advises investors to focus on a fixed income. Since the Fed has hiked rates, Treasury yields have also soared. One good thing about this is that you can get income from your very conservative portfolio. So, it is very good if investors shift some allocations to fixed income. Charlie Munger has already advised investors to look beyond the inflation spike and back fossil fuels and renewable energy. He also said they should never have anything to do with cryptocurrencies. You shouldn't even try to have it in your mind to buy. Munger has always been brutally honest about his hatred for investing in cryptocurrency. He has stated in the past that cryptos are fraudulent. He even deemed Bitcoin to be a noxious poison, stupid, and immoral. He claimed that Bitcoin sellers and other altcoins are not trustworthy and that digital currencies are nothing but a mass folly. I think anybody that sells this stuff is either delusional or evil, Munger told the Financial Review. I won't touch the crypto. I'm not interested in undermining the national currencies of the world. Never touch it. Never buy it. Let it pass by. I regard it as almost insane to buy this stuff or to trade in it. I just avoid it as if it were an open sewer full of malicious organisms. I just totally avoid and recommend everybody else follow my example. Also, it is very absurd to make a blind investment. Do not even fall for it, no matter how it is hyped on social networks. If you're planning to invest just like Munger, you should only invest in areas that interest you, but you should also invest in the industries you know intimately. Investing because others are doing that isn't a good idea. This is because investing is a process that takes quite a bit of research. You don't have to do exclusive research if you're not interested in whatever you're researching. Munger also emphasized that being a business owner can be highly profitable. As larger companies lay off their employees, business owners who provide services to self-employed self-starters can find opportunities during difficult economic times. The recession fueled the demand for most business formation and compliance filing services. So, the courage to take risks and start your own business is always part of the dream. Generally speaking, people see a job as a safe and secure option, and that businesses can scare many people because of the tasks involved in just getting started and even the risks it takes. However, if you don't start, you won't get there. Despite the high financial risk, it is always rewarding to run your own business because it gives you a higher chance to make more money even when the economy isn't doing well. As a business owner, you'll be your own boss, and you can't get fired, unlike when you're employed by someone else. You will also be free to make decisions crucial to your business's success and, indeed, benefit from your own hard work. Another way to invest during a recession, according to Charlie Munger, is to set long-term goals. To some, the biggest long-term financial goal for most people is saving enough money to retire. Even if you do this, make sure you're really saving enough. One of the most common mistakes is trying to seize any rising price wave for quick returns, which does not work that way. You shouldn't invest all because you want to see an instant gain, and it's best to invest with a multi-decade horizon rather than seeking quick earnings. On a final note, anything you do to improve your talents and make yourself more valuable will always get paid off in the long run. That's why it's always advisable to invest in oneself. Investing in yourself is more than just acquiring stocks and bonds. When you make conscious decisions to invest in your health, career, financial well-being, and interests, you are surely setting yourself up for success in the future. Remember that you will always be your greatest asset. Try these strategies and you'll surely be successful even during a recession. And that's all for today, guys, and we hope you enjoy this video. Also, do not forget to subscribe to this channel and give this video a like. Ensure you also click on the notification icon to stay updated with our videos. Thanks for watching. See you in the next video.